Okay, the Market Skyline, episode 268. It's the 7th of May, 2018. Here we are, moving outside of earnings season into the month of May, that old adage, sell in May and go away. Well, I've got my brother Mark here to kind of go through the markets with me and give you our take on it and whether or not that's what we're seeing in the prices. Mark, how you doing today?
Good, thanks, Tim.
Now, ES is the futures contract for the S&P 500. To me, it's the first product I look at each and every morning, okay? And right now, we've got three white candles in a row, three green candles going up on the 3rd, up on the 4th, and up here on the 7th. Now, we've just got a naked chart here, Mark. What are you seeing in the price action for the S&P?
You have a real battle zone coming up. If the market continues to rally tomorrow and the next day, you have a real battle zone. On top of, and the line you just drew at around 27.20, a little north of that, I think on the SPY it's 271.30. That was the last higher high in the swing that was established. It was actually a lower high. As the market has rallied each time over the last 3 or 4 months, it's slapped down each and every time, and along the way has established a series of lower highs. Now, this isn't just some random technical observation I'm making. It is a highly referenced point that lots of talking heads, lots of people in the financial media are referring to. So this is not an obscure technical signal. This is a widely pointed out chart pattern that lots and lots and lots of people are discussing. So I expect a real battle here in the attempt to establish a new high. That would break the current short-term downtrend we've been experiencing in the market. It wouldn't mean that the bulls are just going to take off and go running, but it would be a breaking of that price level, the establishment of a new higher high. It would mark a nice bullish technical signal. Now, until that happens, I'll believe it when I see it. When resistance areas form, I usually bet that the resistance area will hold. Doesn't hold all the time, so I'll believe it when I see it. In conjunction, that trend line connecting the highs that you've drawn on the chart, Tim, that trend line is also another area that the stock has to get through. And then if you use a moving average called the 20 weekly moving average, which is one of my favorite indicators, it's still below that, it's still acting as resistance. And it lines up around that 2,700 level. So you've got a lot of technical barriers for the bulls to overcome in the coming days on the broad market, on the S&P 500. A lot of technical barriers. Can they get through it? I guess. I'll bet resistance holding most of the time, though.
What's interesting about the market is that everybody's got their different ways they look at it for sure. But one thing I'm hearing consistently from traders right now is this compression, Mark. Whether it's moving averages coming together, whether it's patterns compressing together. Coach Grant over at Tackle Trading was talking about a triangle, or a consolidation, that's happening. You're referencing some of the MAs compressing together in these technical zones. Wherever it's going to go, it's got to make a decision.
There's a lot of pent-up energy. There's no doubt about that.
Yep.
There is a lot of pent-up energy. These compression patterns, everybody's talking about them. And when we talk about compression patterns, we're just talking about a narrowing resistance and support area where it's getting tighter and tighter and tighter. When it finally breaks, wherever it breaks, it's probably going to break in a big way. And
generally breaking with institutional intent needs some volume behind it. One thing about this rally that I don't trust right now is that you haven't seen that much volume come back in the market.
Yeah,
it's going to be interesting.
Now go back to February, because I love pointing this out when I'm teaching about the concept of volume in recent charts. On those rally days in February, look at the volume on the rally days. They were massive, absolutely massive. Rally days recently, like if you go back over the last month, the rally days are actually much smaller than the bearish days. So
Very interesting. All right, until further notice, ES is pretty neutral in my opinion. You've got three good strong candles, back and forth patterns. You're going to be able to find your favorite stocks, I'm sure, and there are good bull and bear picks, and we're just going to have to be on a wait and see mode until we get a breaking of this range. While all of that is happening, the volatility index is something I watch all the time. It's now in fade mode. Mark, we're sitting down here at 1492 on volatility. Which means options are cheaper than what they were, but they're more expensive than what they were last year. If you look back at volatility over a 3-year period, during really big bull runs, volatility has been as low as 8, 10, 12. It's been lower than where it is today. Are you a net buyer or seller of options in the market, Mark? Do you see this as just you sell them in general?
Yes.
And do you think volatility of 15, does that mean anything for you?
I mean, it's better than it was last year's garbage year for selling options. I mean, it was really tough doing any strategy last year selling options. Even this, you'll take this. I mean, it's been a really good year to be an option seller. I mean, it's almost been an ideal year. You've had a market that's had really higher volatility, some real spikes. But over the last few months, the market really hasn't gone anywhere. So it's actually been a great year to be an option seller. It's a great stretch because higher volatility, but the market hasn't done anything. Had lots of crazy days. But
there's no doubt. The market really hasn't done much since that big massive sell-off in February where we did hit volatility at 50. But I'm with you. I think net selling of options when volatility spikes has obviously been the better play. Where traders can get into trouble just selling without a plan is if they don't know how to manage it. Some of those reward to risk ratios can be inverted, and that's where good systems and design come in. But I'm with you as well. I'm still a net seller. And if the market stays consolidating, volatility will continue to fade. The only thing that can make the volatility index pop is if this index rally that we were just looking at on the S&P, if it took a nosedive and sold lower, obviously VIX would spike back up because that's the nature of how that math works. Crude oil, one of my favorites, Now, over the weekend, there was some news out of Venezuela, something going on with the Venezuelan oil, market, potentially having a bunch of disruptions. Politically, they've not been strong. Their inflation rate's 20, 30%, Mark, something like that. Their currency's been absolutely manipulated by their government, and so it caused oil to spike higher.
The currency's been manipulated by the government as opposed to other governments that
sure
manipulate their currencies.
I think that should just be in the definition of fiat currency, right? Government manipulation is what it is. What are you seeing in crude here? I see a top. I see a candle here as we're going into the end of Monday, and an index where it tried to rally on this news, depressed, production and all that kind of stuff. You should have seen a spike. But that candle right there, I mean, Mark, give me a read on crude.
Listen, when it comes to crude, I treat commodities a little different. I don't let any singular candle dictate and get me too excited because, I mean, with crude, there's so many things going on any given week. There's so many geopolitical things. There's so many reports that can immediately reverse any given pattern. So, I mean, while I am a very short-term trader, I try to take a longer view with crude and other commodities, try to have a little intermediate focus. I'll never be a long-term trader, but I try to have a little longer focus. And so, I mean, it's been obvious for a while that the bulls have been in control. The bulls have been in control. Every time, and what really has given me that sign is every time there's been a weekly report where, you had an inventory, number that was bearish, the market quickly shrugged it off. Like there was short-term price movement to the downside, but quickly shrugged it off and then just kept on trucking. So, one of the things that really drove crude oil down for stretches last year was heightened worries of, increased productivity and supply coming out of the United States. And, some of the reports the last few weeks that would have last year driven crude oil down huge, the market immediately shrugs it off. So the bulls undoubtedly have been in control. I don't see them not staying in control as long as there's political tension in some of those oil producing parts of the world, such as Iran, which we certainly have right now.
Well, yeah, you've got, I mean, think
And
about these headlines. You've got Venezuelan, oil markets potentially collapsing. You've got sanctions possibly going on to Iran. OPEC producing countries can't figure out exactly what their production schedule needs to be. You have news out of the U.S. all the time that could affect oil, and bulls are just in charge here. Doesn't mean they're going to go up every day, but it's generally been a very bullish market in oil. Posture that mark against a rising dollar, though, and that has decoupled an old relationship. Usually when dollars went up, oil would come down. They're not necessarily operating like that right now.
Mistake. If the dollar actually is in something, I mean, it's only been in a couple-week rally of any magnitude.
Mm-hmm.
If that was sustained, oil can't stay up here. I mean, that relationship will ensue again. Much like anything, it's like it's shrugged off bad inventory reports. It's also shrugged off a rising dollar.
Mm-hmm.
The bulls have been in so much charge lately that they will just shrug everything off on bad news. But that cannot sustain forever, especially if you see a prolonged trend in the dollar.
Sure. So you have a dollar rally, you have oil rally, and the dollar index has been really, really strong. But this rally is now taking us into some levels that can create some resistance here. There's no doubt about it. Do you think the dollar has legs here, Mark, following the politics behind it, the move in the chart? What are you seeing in the dollar?
Well, it's much like if you draw, once again, if you go back, and if you went back a little further in time, I don't know how far your chart's going back, but if you went back a little further, let's just go back and just examine that lower. Let's just do the same exercise we did on the SPY, where in the midst of the downtrend, you had a series of lower highs established. So, because during any trend,
Sure.
Nothing goes down every day, nothing goes up every day. And so when the dollar would rally, the peaks it would establish during that rally continually were lower and lower and lower.
So let me set this up. I love where your mind's going here. We're looking at a chart right here from October till January of last year. I've moved my chart back in time so that we can examine how the behavior was during that period. When it was going lower, you'd have lower high, lower low, lower high, lower low, and then the rally started to change a little bit. You put in a higher high right here, okay? So early February, just a very subtle technical difference, but a trader knows, all right, now it's pressing this resistance, even trying to break out.
Yes, even though that rally wasn't sustained, that was a telling sign on the dollar.
Sure.
Breaking that lower high was a sign that, wow, that, we have maybe entering a neutral to sideways trend for a little bit when you broke that previous high.
Mm-hmm. Then you have a higher low, a lower high, so it's compressing here, much like the stock market is at this point. This is technical churn as it's happening, and then, volatility, back and forth, can't pick a direction until, boom, breakout, right? But the action that literally took months to develop, Mark, because you're talking about the biggest investment in the world, the U.S. currency market, in the biggest market in the world, which is Forex, it took a long time for that churn to develop, but then the breakout did take off and it had legs. I had this wrong.
Trading Just As podcast listeners, don't be surprised if one way or another, this chart looks a lot like the stock market chart. Compressing, battling. There's a lot of battle back and forth with one side winning. Don't be surprised if that battle continues for a while, but when the winner eventually, when resistance was finally broken, the dollar just exploded. Consolidated for 3 months and then exploded upward.
And then in a longer time frame, you have other battles going on. These are the basic tenets of technical analysis. One thing I love when I'm teaching charting is to tell people, keep it simple. Learn to read the candles, the pivots, the trends, add moving averages. Far too often, Mark, I see new traders with like 50 different gadgets on their chart and they don't know how to read any of them, and they're looking for that magic special sauce, that secret, indicator, when really a very simple way to approach markets is just to learn to read the price action. Longer term, the short-term rally in the dollar is now just coming into some resistance. So now you got new battle lines drawn.
And for like a lot of people, they hear people talking about the dollar, and if they don't trade Forex, they start to tune out. This is not one of those times. Like I find myself trading all kinds of things, but really fixating on one thing. And right now it's stocks. But make no mistake, a sustained rally in the dollar is not good for oil, and it is not good for the stock market. If this rally takes off and is sustained in the dollar, that is not good for oil or the stock market. So if you are long stocks or long oil, you want to be you want to be rooting against the dollar having a sustained rally.
The specific instruments that we look at during the Skyline, it doesn't matter if you trade them or not. You use them as indicators for everything else you do. I mean, frankly, even if all you ever did was trade Apple or Google or a certain set of 5 or 10 stocks, knowing what's going on with currency markets, with oil markets, those are important tenets of anybody's trading account. 2 more things we always look at when we're looking through the Market Skyline. Gold is the next one. It's been a safe haven investment, and with the dollar rally, gold has come down. That makes sense. There's an inverse correlation there. Gold's now finding a support zone. It could be an opportunity here. Historically, Mark, when you have as much risk and pain or problems internationally like we've seen, gold has been an investment people put their money in, but we haven't seen a big rally in gold this year. What's your take on this one?
Well, it has a really, really, really significant resistance level up there. I mean, you have multiple times it's came up to that price level over multiple different months, and it just wants no part of going higher. Now, whenever that occurs, whenever you have a resistance level that strong holds, there is going to be a natural sell-off that occurs.
Now, sitting on support, when you're in a neutral consolidation range like this, do you see support as an entry point or something that you just...
I don't on commodities. I'm a little different. Like, I love support and resistance. I would get a, T-shirt made that says, I heart support. I love support as an entry point constantly. But because of the inverse relationship you mentioned with the dollar, because of strength in the dollar currently, I really am hesitant getting into gold, even at technical support levels, with the dollar showing that kind of strength.
Just too much going on with it.
There's too strong a relationship. I mean, back when I was a kid, this relationship was between the market and gold. Market went down, you could almost guarantee gold went up, and vice versa. That relationship is so strong between both the dollar, between different currencies and gold, that just a little hesitant with that. I mean, that dollar strengthening spooks me on everything. I won't lie. It spooks me on everything. It's a really important chart.
Well, it is the biggest domino in the domino effects of what we look at in the international markets, as well as inter-market analysis. And, it's true even in Bitcoin. I know that you don't, you have the same opinion of Bitcoin as Warren Buffett does.
What I allowed to use? You guys had to muffle me.
No, you can say whatever you want. I will say our podcast is PG-13, which means Cam will beat what you say.
Then I can't talk about Bitcoin.
Well, let me ask you a question about Bitcoin, because we go through the charts.
I can't talk about Bitcoin, and then your next words out of your mouth are, well, let me ask you a question. That's like saying, I don't smoke anymore, and you say, hey, Mark, here's a cigarette. You want one?
I will keep it in your field, in your lane. You're an expert in charting.
Yes.
Do charting principles apply to Bitcoin?
100%, absolutely. A chart's a chart. Bitcoin, absolutely, 100%.
Okay. So when you look at a range like this, until it breaks one of those key levels, it's pretty much neutral. Is that right?
Oh, 100%. Not even a question. It's not debatable.
Now, that is probably the only way I could get Mark to talk about Bitcoin. Just simply get it down to the chart.
This scam, ridiculous Beanie Baby baseball card current fad that people are putting their life savings into. That's all I had to say.
C'est la vie, my friend. You know, the old tulip, discussion, I'm sure we can save for another time. Guys, that has been our Market Skyline episode
Oh,
number
I got one last
268.
thing.
All right. All right.
Do you really think the power's the? Do you bet on power in life, Tim? You bet on power?
Yes, I do.
All right. Do you think the powers that be will ever let Bitcoin succeed?
Well, if you want to get into a discussion about it, I'm more than happy to. What I would say
And
is,
that is the Market Skyline Report, brought to you by the owner of Mark Justice and his younger brother Tim, who's still learning from the wise and sage man 10 years older than him. So,
very good, Master Jedi. I do appreciate it. All right, guys, we're going to be back right after this break with our feature, and we're going to talk about poker, the market, everything else.